Behavioral finance, it's actually a combination of two things. It is behavioral biases and finance. So if I take a simple example that our human brain actually has two parts. One is the intuitive part, one is the rational part. And the intuitive part, which will cause us to make intuitive decisions, impulsive decisions. And that is what we call the behavioral biases part. And the rational part will help us understanding what is the true value of a company. So this combination together is called behavioral finance. And why we choose behavioral finance as our investment philosophy is because human behavior hasn't changed for thousands of years, and we are very confident it's not going to change anytime soon. So by choosing that as our investment philosophy, behavioral finance provides an exploitable foundation for ample investment opportunities in emerging markets. For equity investment, you actually get two parts of return. One is the capital gain, and the other one is the dividend return. Let me give you one example. Since 1995 up to end of 2014, for the MSCI BRIC index, it gave you a total return of about 360%, within which 200% actually came from dividends. So when you invested a company, you not only want to see the company to grow, but at the same time, investors want to have some cash back. And that cash back is actually what we call dividends. And if you look at in the past 2 decades, if you look at every rolling 5-year time period, the dividend return is about 15 to even 30% at some time point. So giving dividends, returning cash back to investors is something that is a good evidence of a good corporate governance, and it's also something that investors would like to see as well. There are two ways of investing in emerging markets. One passive, one active. And by passive, a lot of people will invest in the ETFs of the emerging markets, equity markets. Let me give you one example. In the last decade, 10 years, one of the well-known ETF in the market actually lagged behind the index by more than 7%. So we strongly recommend investors when you invest in less efficient markets like emerging markets, you want to pick an active manager who can pick you a good stock, a good basket of stocks, and construct a good portfolio for you. We do not recommend investors just blindly to buy the entire market. For example, in last year, in 2014, Russia was one of the markets that a lot of investors were not very optimistic about, and so did us. But we actually pick right stocks in that country. We picked exporters in Russia that benefited from the depreciation of the Russian currency, as well as the strengthening of the nickel price. And also the company paid very good dividends as well. So there are good stocks for you to invest in that country, but you don't want to buy the entire index because there are other stocks in that index are not very good investment opportunities. Therefore, we think hiring an active manager will help you pick the best stocks out of that universe. And secondly, for the systematic strategies, we also have a risk model. There's a risk view of all the stocks in the investment universe as well. So that helps you to systematically to control the risk of the entire portfolio. The benchmark is rebalanced on an annual basis, and our strategy is to rebalance on a monthly basis so that we can capture investment opportunities on a more timely fashion. There are strategies that are more closely hugging the benchmark, while our strategy is to take investment opportunities as much as we can. Therefore, we choose to rebalance on a monthly basis instead of on an annual basis. For this strategy, we're not only looking at investment opportunities in the 4 BRIC countries, but also the other 16 plus countries in emerging countries as well. For 2 reasons. Number 1, there are other economies in emerging markets that are growing very fast and very healthy. Countries in Southeast Asia, countries like South Africa, there are ample investment opportunities for us. And secondly, there are many stocks in those countries, non-BRIC countries, provide high dividends. For example, information technology stocks in Taiwan, they provide very high dividend yields. Oftentimes, you can find stocks with dividend yields even higher, 5 or 6%. Stocks in telecom stocks in Thailand, in Malaysia, also provide very strong dividend yield as well. And there are a lot of domestic consumption stocks in South Africa, in Indonesia, that are providing very strong growth for the future. And domestic consumption is a secular change, is a secular growth theme for emerging countries for the next decade. That's why we are taking this opportunity to invest outside of BRIC countries to bring more capital gains, more dividend returns for our investors.